Good morning, traders. It is Thursday, October 30th, 2014. It's about 8:07 a.m. Chicago time. I apologize for the delay in starting up today. We're 7 minutes late. My charts decided to go through a restart right when I was supposed to get going on this trader bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick rundown of what's happened overnight, news that may drive us. As you all know from yesterday's action, the FOMC has ended bond buying and has taken a less dovish tone in their outlook. Considerable time was left in. The likelihood of inflation running persistently below 2% had diminished somewhat since early this year. With that, you know, there were a lot of articles and a lot of things, a lot of interpretations, and essentially, it's an interesting situation we have in that CPI is not picking up, as I'll cover here in a minute, in Europe, and the U.S. is ready to turn as far as interest rates are concerned, ready to take away the crack pipe from the market, or the punch bowl, as some call it. I think it's a little bit more of an addiction to Fed intervention than just a punch bowl, but at the same time, the effect on Europe would probably be very negative, I think. So I think, yes, the Fed is not buying bonds or treasuries as actively as it was during the QE period, but it's got many other tools that it can use to continue to have the same effect without being so transparent or overt about it. As far as interest rates rising, not seeing that. They still think that the expectation for interest rates rising would be in Q2 of 2015. But unless something turns around real quick in Europe, I just don't see that that's going to be a play. We'll see how that goes. New Zealand's central bank, the Reserve Bank of New Zealand, left its official cash rate unchanged at 3.5%. New Zealand's currency is a big player in the carry trade. Second straight pause in the current tightening cycle sends dovish message on rate outlook. Even the Bank of New Zealand has paused on its interest rate increases. Brazil's central bank surprises and hikes the Selic target rate by 25 basis points to 11.25 to ensure inflation falls to target. So Brazil's dealing with the opposite issue. German October net unemployment change registers its first improvement in 7 months, negative 22,000 versus expected plus 4,000. Spanish and German month-on-month CPI readings come in below expectations, and this is what I was talking about earlier. Germany's CPI came in at 0.8% versus 0.9% expected. So there's some pressure there. October nationwide housing prices in the UK came in at 0.5% versus 0.3%. Estimated year-on-year 9 versus 8.5%. A continued hot real estate market in the UK. The unemployment rate, by the way, in Germany is in line at 6.7%. The S&P fair value today, negative 6.1. So the difference between the index, cash index, and the futures is negative 6.1 points. Looking ahead, we have 9:30 EIA natural gas inventories. At 9:30 Central, we have ECB's Liikanen speaking in Berlin at 10 Central. We have the Treasury selling 29 billion in 70-year notes at noon, and the Bank of Spain's De Molina speaks today at 1 o'clock Central. At 1:15, ECB's Lind speaks in Madrid. And then at 6:30 in the evening, Chicago time, Japan September jobless rate is expected to come out at 3.6%. Also at the same time, Japan's September national CPI year on year is expected to come out at 3.3%. That might be a cause for movement in the Asian session. And that's really it for today. Bank of Japan has a rate decision, has to make a rate decision on Friday as well. So with that in mind, there's obviously not very much that's likely to drive the US session here. I know there are a couple speakers and so forth, but not expecting anything dramatic. Right now, Yellen's speaking. She has released a pre-written statement, and keeping an ear out for that through the news services that I use. Yesterday, what an interesting day. Overall, let me get rid of this. Overall, we had a fairly muted trade in the morning. We anticipated that ahead of the FOMC. Overall, the market has done a nice job of pushing. Is this the right session? No. This chart's going to have to redraw because I have it on all sessions and we need it to be day session only to see what the real action is, what the underlying involved. So yesterday, the market opened on the edge of the prior day's range. It tested up, recall, 87.50 was a key area, key test area above. As I'd said earlier this week or last week, I don't remember, 55.50, I think it was last week. 55.50 is a key test area. We tested that level a couple times, and I had indicated last week that the 55.50 is expected to see resistance on the first go, which we got here on the 23rd. Saw resistance again on the 24th as it rejected the first test up, and then that day the market pushed and closed at 60 quarter, pushed all the way up to 60 quarter, and it closed on at 59.75, just 2 ticks below. And then the next day was in range. That was Monday. What I had said about the 55.50s, if the market actually gets through that area and pushes through 62, which was a naked point of control, then the natural thing for the auction to do, as I cover in my in the webinars on my website, the natural thing for the market to do is to go and test the next LVN up, which we had at 80.25, which was the high of Tuesday. It took it out by 2 ticks. 1980.75 was the high on Tuesday. Tuesday, we were looking for 71.75 and 80.25. Again, you can always go back and watch the Trader Bites, and I really recommend you do this if you're trying to learn the auction process and what the big picture, the real drivers of the market. I suggest you go back and look at the Trader Bites, which are done pre-market for that day. So pre-market, I had indicated 71.75, 80.25 on the outside. This day had a wider range than expected. But the idea here is once we break into a prior balance zone, the next likely test area is the neckline, the next neckline, or the low volume node. If we start to push in that direction, then expect the market to test the most traded price, which is what's considered valuable. The most valuable price in this area is 87.50, and that's what I was targeting yesterday, 87.50. The market pushed up to 85.75, stopping short by about I don't know, 7 or 9 ticks, something like that. And then we had our FOMC. So if we look at the action here yesterday, Scroll this back. I'm back down to 2 ticks on the Renko because of the lack of volatility. So let's run through this. So here we are. We open. You could have selected 81 or 81 and a quarter as your opening swing. We open on the edge of value. Remember, we had a strong run up on Tuesday and left a very weak structure. Where did we leave the weak structure? Down, all the way down to 71 quarter, right in line with 71.75. 71. Remember, these levels are zones, are areas, not specific to the tick levels. Although the market sometimes trades them that way, I don't anticipate that a level is going to be tested to the tick. It often does. It does a lot. But we, the initial break on Tuesday, where we had the biggest rotation, where we saw some higher time frame action, some OTF action, is from 71 and a quarter. And so the market then breaks through, rotates back down to 74, continues higher and closes, and finally gets the 80 quarter right at the end of the day and pushes through to 80.75 by 2 ticks, as I covered. So what we have here is the market lingering on the edge of the range out of value. The value is the gray area below. And so the expectation here is that given the strength of this, the expectation here is that it's likely to chop around on the open. Yesterday, I did not have a clear indication on a primary hypothesis. It seemed like a 50-50 shot with the way Tuesday closed. Tuesday's close has some weak structure. However, the only reason this this rally stopped is because the market ran out of time. And when it does that, we expect it to try to continue in that direction once it opens. So in looking at this, we had 2 key ideas, that it would open, choppy open given the FOMC, and then either push up towards 87.50 or down towards 71.75 to take back this weak structure that it left behind. I recall showing you on this chart here how thin this structure is. There's very, very little that traded up here, and so this area is likely to be re-auctioned. Okay. So as we see what happened here, we have an open auction in range right on the edge of the prior day. We push up. We find initiative buyers away from value. Initiative buyers are moving away from the most recent value. Those are initiative. And it pulls back. It pulls back to retest the opening swing at 81 and a quarter against the mid VWAP, and it continues its rotation up. I had posted in the chat room that we're looking for continued higher given the structure that we had here, and we did. We pushed to 85.75, and then we finally crossed below the mid. We start to attack the opening swing. There's a statistical probability of the opening swing when it's retested under certain conditions. I won't cover that now. Under certain conditions, it is likely to test the other side. So when I saw this again in the Stage 5 chat room, I'd said, look out. I think I actually tweeted it out. Look out for a test of 79 on the next rotation. And there it is. It pushes back up, and there's the test of 79. So it fulfills that stat. And a pullback to mid again. Just beautiful trading. A weak low. 1 tick of the low. Look out for the failed auction, potentially to push up. If it does not push up right away, then it's likely to start moving lower. And it moves lower. There's no failed auction here. So the expectation is now what? It is 71.75, 71 and a quarter at some point. Again, this is before the FOMC came out. And here it's walking its way back up. Another test of the mid. That's why I have the mid on here. Very important part of how I look at the market is that mid. I expect a lower rotation. Again, to 71.75, plenty of opportunity to put something on at low risk, in my opinion. And it continues lower. And the Fed is around the corner. Here's the market pausing. And there's your there's your correction prior to the Fed here at 12:30. The Fed is out at this point right here, and the market doesn't really respond readily to the Fed. It seems to have made its move already, and then you get the higher activity, more Renko bars as we push down to the 71.25, 71.75. It pushes to 71.50 for a 4-point rotation. Just beautiful. And I apologize for saying beautiful if you had a bad day yesterday. I know that doesn't feel good. I've been in that situation where somebody's screaming about how great the market is while I was getting my lungs pulled out. And so it's this is an auction, and it really is auctioning under its own power, which is a nice thing. Once it takes out that 71.25, if it does not find a bounce here from where buyers stepped in, then the expectation is for 66. So the next thing to shoot for, if you have a runner or if you're not on anything and are looking to target anything, the next thing to shoot for, since it gave up this low volume node, is to test the next high volume node, which was 66.25. So the job here is to look at what areas can I trade against that would give me an opportunity to get short into the 66.25. And so the market, kind of does its thing, requires some patience, and there it is. It pushes to 66.25, fulfills that. The 66.25 is expected to be choppy, so we expect some back and forth here. The next area down would be the 62.50 below. And we see here that we did get the chop. See how it starts to chop around and find balance here, just like it did against the LVN. This is not random, folks. People argue that the market's random. It is not random. This is the chop that we expect. We expect it to take a while. We expect it to rotate and retest. And it did, but eventually, if it rotates back down into this point of control, then we expect 62.50 or that area. And here it is pushing through. There it comes through, and 64, 62 even to the 62.50. So it takes out the next target by 2. And like I said, it is very methodical auction. And then what happens is it finds its buyers. Now it's moved low enough to have found its buyers. The next area to test is 74 if it's found its buyers, and 78.50. And that's what we would look for into the close. Let's see what happens. There's your bounce at the mid at 74 for a 2.5-point rotation. Okay, so we have a reaction down from 74 to 70.50. But the next area up would be the IB low. If there's any buying left, it gives that up. It cannot persist. The buyers cannot persist, and it starts to. We get really close to the close here, a retest of the low, and then finally, there it is. It pushes to the IB low, this yellow line here, for another test before it closes. Okay, and it fails at the IB low. This is a clear demonstration of the fact that these auction elements that I have on this chart here, and of course, you can always draw a line somewhere and say, see how it hit it. As the market eventually hits everything, but it's not what it hit, it's how it did it. That's the important part and the aspect of this that folks have a hard time with. With the overnight session the way it is, and I'm running out of time here, with the overnight session and the way things have worked out over on the European news, the market is still experiencing some weakness with the fact that the Fed is tapering and there's a threat of higher interest rates. Soon, historically, we would see the stock market correct, as this is a bearish outlook on the market. So we'll see if today gives us the real selling that comes after the Fed provides a hawkish outlook. Depends on what Yellen says. I'm surprised that there aren't that many Fed speakers today other than Yellen. But overall, the market has maintained its volume, very blocky volume on the low end of yesterday's range. and it's below the mid. I expect that we would get some responsive buying at the beginning, but overall, I think the tone for today is likely to be on the sell side. I believe the sell side would likely dominate the trade. So, so that's where what I'm looking at today. This is a typical in range open. So you have a decent probability of one of two things, either hype 1 or hype 2 to play out. I think we get responsive on the open back up through 71.75. The close is 72.25, so I expect at least a test of that, if not 75.50. But I expect sellers to take over and to try to push down. I expect it to get stuck in this area here if sellers are not motivated. But I think there's likely to be a sell side, some sell side pressure today into today's trading. I'll leave you with that thought. I know I covered a lot here. I want to make sure that folks who are watching, who are taking the time to look at this, you can invest this time and many, many other things. I understand that. But I want you to understand the story. It's really important to walk through the story of what happened, especially on FOMC, unemployment, those kinds of days. You need to kind of follow the action and see how it tested the levels that it's testing on a very, very short time range, so that you can get a feel for what the flow is that we're coming into in this session from yesterday's session. Couple that with a look at what happened last night, and it gives you an idea of how things are shaping up. We have a lower low on yesterday's low on the overnight. We have some bearish news from the Fed, which is a key driver of price action for equities. And so the expectation is, yes, the market's likely to auction back up responsive, as it normally does, to check this value, this point of control. But overall, I expect that the sellers will have an incentive today to come out and make some adjustments. And we'll see how that goes. The hypo 2 would likely be an attempt down and a strong push up. I'm open to that. I'd love for hypo 1 to be shown to be wrong early, or hypo 2 to be shown to be wrong early. I don't care. I just want it to go. Good luck. The market is open, and I'll catch you soon. Take care.